What's going on, Investomaniacs? Your boy Knight Rider here, and today we've got PG&E, that's California's largest power and gas provider, and aircraft manufacturing giant Boeing, and they are proving that safety issues come with a pretty hefty price tag. The latest news to come out on PG&E was the publication of reports which showed that the challenged utility needs to perform nearly 10,000 repairs on their ancient power grid. Some of their infrastructure is close to a century old, including original transmission towers and substations. This OG infrastructure is so old, it should be collecting pension. The accelerated inspection, which began in late 2018, shows problems with almost every component of the power grid. Poles, wires, transformers. This ultimately led to the permanent shutdown of the Caribou-Palamo line due to safety concerns. This was the line responsible for sparking the deadly and devastating Paradise Fire last November. The inspection was initiated after PG&E was declared liable in not only the Paradise Fire, but to 18 other major wildfires throughout California in 2017 and 2018. The company filed for Chapter 11 bankruptcy protection in January of this year, citing the overwhelming costs associated with their liability in the fires, a tally which totals over $30 billion. In the meantime, work will begin to repair the many leaking transformers, broken power poles, and damaged towers. The utility is also pledging to trim or eliminate several hundred trees which endanger their wires and pose a brush fire threat. For the 16 million customers served by PG&E, that may mean improved utility service in the long run, but for now, it leaves a lot of questions. How long will these repairs take to complete? How will it affect service in the short term? And at an estimated cost of $2.3 billion to complete these repairs, how will that cost affect the bottom line and therefore the stock price? PG&E has promised better equipment, better safety, and more transparency, but it will remain to be seen how these repairs progress and how the utility fares during the summer wildfire season this year. With the stock having lost roughly 3/4 of its valuation in less than the past 2 years from its peak, I know some of you may want to try and hop on for a good bargain hunt, but guys, this is not the place to go bargain hunting. As for Boeing, they've been listening to testimony this week, which is taking place in Washington, D.C., delivered by the families of people who lost people who lost their families in 2 fatal crashes of their 737 MAX airliner, which has been grounded in the wake of those incidents. This comes after major U.S. airlines extended their timelines on keeping their MAXs on the ground deep into the fall. Even while Boeing is working frantically to fix the software problem at the root of these 2 fatal events, the planes are still grounded, so that's not exactly what you want to hear as an investor. Southwest Airlines, for example, will be keeping its MAXs out of the air until at least October 1st, and American Airlines is going even further, grounding their jets until early November. And as you can see, United Airlines also extended their grounding as well. This could affect holiday travel as carriers try to find alternate aircraft routes to add to their flight rotation. And I personally had to cancel a Southwest Airlines flight due to route changes, where I went from a nonstop flight to having, I think, 3 layovers. So I had to cancel that and then rebook with Frontier, which is now the only carrier which has a nonstop flight from Orlando to San Diego. Boeing said it is working as quickly as possible to comply with the FAA and correct the software issue a directional override, which caused the crashes of both a Lion Air flight in October 2018 and an Ethiopian Airlines flight in March of 2019. This surprised me because I thought Ethiopian Airlines was still flying the DC-3. In the meantime, Boeing has also offered up $100 million, which coincidentally is the cost of a brand new MAX, to the families of the victims of the crashes, a hefty sum being voluntarily given. And this is not in lieu of, but in addition to anything awarded in individual lawsuits. That means when all is said and done, Boeing could actually be out much more than $100 million. And there's still no indication of when or even necessarily if that 737 MAX will fly again. The ripple effect out into the rest of the airline industry could equate to billions of dollars lost by multiple corporations through lost productivity. And although Boeing is one of the oldest and most established aircraft builders, the problem plaguing its popular jetliner cannot be an easy pill to swallow. Guys, I really like Boeing overall. It's a long-term winner, and I believe it will be a winner in the future, but there's just no reason to get in this stock right now. We need to wait until there's at least a light at the end of the tunnel, and then you can pounce. That's it for today, guys. I really appreciate the likes, comments, and subs. Let me know if you have any thoughts or any stocks you'd like me to cover. May the market be with you.